This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. We've got an exciting show today planned. As always, here, going to join me in a few minutes is going to be Tony Unkel from Entrust Group. Entrust is a really exciting company, allowing you to do cool things with your IRA. If you're like me and you want to have just a little bit more, of a hands-on approach to your retirement account, you don't want to just leave it off to someone else. You want to have a self-directed Entrust this is going to be a conversation you definitely want to listen to because, again, the company's allowing you to do some different cool things that you can't do other places with your self-directed IRA. So with that, honestly, I don't want to give it to you because I know Tony will be able to talk about it with, more information than me. So without further ado, let's go ahead and give Tony, our special Zinger Nation, welcome, bring him on and learn a little bit more about the Entrust Group. Tony, how are you doing today? Welcome to Benzinga Live.
I'm doing well. Thank you very much for having me.
Of course. So before we get started, you want to just give us a brief overview of the Entrust Group, what it is you guys do, what you allow your customers to do?
Absolutely. For over 40 years, the Entrust Group has allowed our investors to take charge of their retirement accounts by providing access to tax-advantaged self-directed accounts. Our services allow investors to invest in alternative assets that are not typically available through traditional banks and brokerage firms, making it possible to completely diversify your portfolios. We are not just another self-directed administrator. We like to say that we are the originator, being in business over 40 years, having over 25,000 active clients, and custodying a little over $5 billion in assets under administration.
Got it. So let's talk about the self-directed IRA real quick. What are the differences between a self-directed IRA and I guess what are the similarities between a self-directed IRA and one that you might have that's managed?
Sure. So the IRAs are going to be the same. It's going to be a traditional IRA or a Roth IRA, SEP, simple IRA. We also offer HSAs and ESAs. So on the surface, the accounts are exactly the same, follows all the same IRS rules and regulations. Contribution limits are all the same. What differentiates them is the assets that are held. Your typical IRAs at your typical brokerage firms are invested in the market, stock, bonds, and mutual funds. Self-directed IRAs allow you to diversify outside the market into the alternative space, whether that's real estate, precious metals, hedge funds, startup companies. It really gives you a broader choice of investments to put your money into. Some risky, some safer, but you are in charge of all your own investments and you're outside of the market.
Got it. So why, I guess what would be the advantage for a retail trader or just like normal guy investor like myself to go with a self-directed route as opposed to, going to some big bank and saying, hey, manage this money for me?
Sure. Obviously, you're not paying the management fee. You're going to pay somebody to manage that money for you. Self-directed IRAs are typically geared outside of the market. So retail investors, day traders, probably not the best fit for you. But as you grow your current retirement account and you want to get out of the market or you want to put some capital into real estate, you can go out and buy a rental property where you're managing that type of asset that gives you that nice return annually.
Yeah, and I've seen a graph. I'll try to pull it up real quick. I've seen graphs and charts before that show you like over 30 years. Here's what your retirement account would look like with those management fees taken out and what they would look like without those management fees taken out. Here, wait, actually, I got one. Let's pull this one up real quick. While I'm doing that, Tony, can we talk about at least some of the potential risks involved with a self-directed IRA?
Absolutely. For me, the most important part and responsibility of the account holder with a self-directed IRA is doing your due diligence. Whereas your traditional or your normal IRAs, where you do have that manager doing it, they're picking the assets for you. In a self-directed IRA, that is your responsibility. When it's your responsibility and people have access to significant amount of money, there's always the possibility for fraud. So you really have to do your due diligence on whether, you're lending somebody money, you're buying metals, you're investing into some type of real estate syndication. Really do your deep due diligence and make sure that the investment you are making is safe. If it sounds too good to be true, it's probably too good to be true. So outside of the fraud and the due diligence aspect, another risk is some of these assets are risky. If you're investing in a startup company and it goes belly up, there's no recouping your investment. On the other hand, if it takes off and the company goes public and you're in there as an early seed investor, you're going to make a lot of money for your retirement. Doing your due diligence, investing in what you know would be the safest ways to move forward. Another
100%.
downside is lack of liquidity. So you're not buying and selling private assets. You can't day trade private assets. So some of them have 3 to 5 year or more hold periods. So if you need access to your capital and you're in the alternative space, liquidity could be an issue.
Yeah, and I mean, this whole, getting, I guess, the availability to even touch some of these alternative assets is kind of a newer thing, whether you're talking about companies raising through Reg A or stuff like this. So I want to get a little bit more into that, but I did find this chart real quick, so I'm just going to pull it up. This is just on a article from USA Today. So investing $10,000 a year in a retirement plan that averages 7% returns over 30 years is great. But investing with a 2% fee instead of a 0.5% fee can cost your plan $220,000. So this is actually all with fees. Some fees are just a lot lower. This green bar right here that shows that you'd have around 920,000 where my cursor is. That's with a 0.5% fee. This number down here is with a 2% fee. I don't know, Tony. You're more in the business than I do. I don't even know what do you think the average or normal fee is for a managed retirement account?
I guess it all depends on the advisor you're using, the brokerage firm you're using. Are they fee-based? Are they asset-based? Do they set their own fees for you? I know we can talk about our fees. Of course, we charge fees. It's not going to be as high as this. Some self-directed companies do an asset-based fee, and some do a value-based fee. For us, we think we're right in the middle of the pack when it comes to our fees, where we do charge per asset held with a little, about 15 basis point charge on certain dollar amounts. It's not going to break the bank for your fees, though.
Got it. Well, yeah, I've just always thought that's interesting because, I mean, I know, I've talked to a lot of people, right, who will show me their portfolios or their retirement account, and they're looking for advice or whatever, and they'll say, "Look, I'm paying X amount in fees. The account's growing this much, but it's not even growing as much as it would have been if I was just investing in the S&P 500. So I said, okay, then why don't you do that? And then you're not paying a fee. And then some people like having that peace of mind that there's someone in between them and their money. That's someone. So it's really, anyone listening out there, it's really what you feel the most comfortable with. Like I said at the top of the show, if you're like me, though, I do want to have that more hands-on approach. I want to have more of a say and the final say of where my money's going to. But let's break into some of these alternative asset opportunities that you have when you do go the self-directed route that you don't have at maybe, if you go to your local wealth manager, they're probably just going to put you in a bunch of equities and bonds. What are some of the alternative assets that go in with a company like Entrust Group or going with a self-directed IRA? What do you have access to?
Sure, pretty much everything. So the list is infinite on what you can invest in and what you can do with your money. Most popular ones, real estate, whether that's a syndication, physical real estate, rental properties, commercial properties, land, undeveloped land, all those are allowed. Precious metals, limited partnerships. So what you can do is pretty much infinite. It's easier to discuss on what you're not allowed to do, and the IRS prohibits certain investments within a self-directed IRA. One of those being an S corporation. The other, collectibles, liquor, artwork, and coins. You can invest with something that you currently own. You can invest with your family, lineal descendants, parents, grandparents, children, grandchildren. And you can invest in life insurance policies. When I want to touch on the collectibles, you can invest in liquor, artwork, and coins. So you can't hold a bottle of Screaming Eagle in your IRA, but you can invest in a vineyard. You can't hold a painting, but you can invest in the business behind the art gallery. So your options really are infinite.
So what, I guess, have been the most popular alternative assets that you've seen people dipping into from their self-directed?
Hands down, real estate. Definitely the
Yeah.
most popular. a majority of folks are in real estate. Past few years, the private equity field has been growing. Crowdfunding has been growing. I would say the past year or so, we've seen a huge jump in the precious metal space. So it all depends on the market, what the market's doing, and people want to recover what they've lost. Real estate has always been a pretty stable investment, whether that's retirement money or personal money. So if you can direct that into a Roth IRA and not pay any taxes on those gains, it makes sense for a lot of investors.
What about just the overall, in terms of deposits into people's self-directed IRAs? I mean, I imagine a few years ago, during COVID, when the markets were going crazy, everyone got their stimulus checks. I'm sure there was a lot of money flowing in. Has that, started to come back after it slowed down? Has it always been the same? I mean, what's it looking like?
Sure. So there's three ways to fund a IRA, whether that's a normal IRA or self-directed IRA, and that's via contribution, which the IRS sets your limits annually. It's a rollover, taking money from an old 401k plan from a prior employer, rolling that to the IRA. There's no dollar limit on that. We're doing transfers from your current brokerage IRA into your self-directed IRA. So yes, post-COVID, I think our rollovers, we saw a lot more of them. Unfortunately, a lot of people lost their jobs during COVID, and they tapped into those retirement plans, went into a self-directed IRA, and put their capital to work for them. The dollar amounts are pretty much the same. I haven't seen a big jump or a big decrease over the past couple of years.
Got it. And then why Entrust, Tony? I mean, I'm sure there's lots of other places now. I know you said you guys are the originator, but there are other places I'm sure that people can go set up their self-directed IRAs. Why go with Entrust?
Absolutely. I think there's about 42 custodians out there in the country that do what we do. I'm confident to say that over half of them have modeled themselves on our business. Entrust is the originator. We're in our 41st year of business. We have recently voted the greatest online or the best online portal for investors. Our selling point is we provide you a one single point of contact as well. No call centers, no 800 numbers. You're going to get a designated person based on your geographical location, and that person is going to be there with you from day one until the time you retire and close your account. Now, we're not there to give you investment advice, tax advice, or any types of personal advice. We're there to educate and assist you with setting up the account, completing the proper paperwork for the investments, and guiding you along that process.
Well, there you go, Tony. It's been great to have you on Benzinga Live. Is there anything else you'd like to touch on while I got you?
I appreciate the invite. Thank you very much for having me.
Of course, man. Enjoy the rest of your Thursday, and hopefully we'll chat soon.
Likewise. Take care now.
All right, guys, that was Tony Unkel from the Entrust Group. If you're interested in setting up a IRA, self-directed IRA account there, I'll drop that link in the chat. Again, always exciting to talk to companies that are allowing people like you and I to have more different options and opportunities when it comes to investing. That, again, you go back even as recent as 20 years ago, you didn't have a lot of these opportunities. I mean, it was actually the Jobs Act that was passed, and I want to say like 2011 under the Obama administration, that even allowed people, retail investors to be able to invest in some of these crowdfunding and private equity type investments. So before that, like we weren't even, you had to be institutional. You had to go through all these different steps to even be able to say, hey, I want to go buy shares of this company before it hits the public market. So, again, we have a lot more opportunity now than people did a few years ago. So may as well take advantage of that. Quick programming notes, just run down for the rest of the day. Here in about 20 minutes, I will be bringing on Kirk Huntsman, the CEO of VVOS. Let me go up and pull up my Benzinga Pro, because I reached out to Kirk. We've had Kirk on the show before, but I saw this news the other day, and the stock just absolutely skyrocketed. And I was like, yo, we got to get you back on to talk about this, my man. So here, let me pull up my Benzinga Pro. Here we go. Let's go to the monthly candle here so you guys can see this. Yeah, I mean, VVOS shot up I guess it was in November, this news hit 663% for Vivos Therapeutics. So again, we're going to talk to Kirk here in a few minutes. Got some other big headlines, to talk about. Let's take a look at the overall market just real quick. S&P 500 having a little bounce back day, a couple red days in a row. We weren't really used to that. You can see here The market got up to about 460. Let's see, 460, and then we kind of stalled out there a couple days in a row. We went lower yesterday, and then out today, bouncing back a little bit. So look, I do want to talk about just the overall macro environment right now because there's just a lot of debates going on out there, right? A lot of people are pretty bearish, a lot of people are pretty bullish. Speaking of, I guess let's look at the AAII sentiment survey real quick. So yeah, people are again generally pretty. But here's the thing: I mean, look, last week we had more people bullish and less people bearish than we do this week. So already week over week, we are getting more people getting a little bearish. I mean, this is now people are more bearish than they've been the last 2 weeks. And I mean, I get it. I guess there might be some concerning things out there, whatever. And I do. We're gonna talk about some of those things, but right now, I mean. Saw this tweet yesterday. Let's pull it in. Okay, so this comes from Michael Antonelli. He said, let me get this straight. Oil is under $70. Rates are plummeting, 10-year at 4.1%. If you remember, they were nearing 5% a few weeks ago. 12-month forward earnings are rising. Inflation is falling. Productivity is rising. Stocks are near an all-time high. And I'm supposed to be bearish? So there are a lot of people out there that, again, I don't know what their, I guess, bias toward being bearish is. There are a lot of people out there, and I see it on Twitter a lot, that it just seems like they're mostly bearish, right? They say the economy is terrible, like the zero hedge type thing, all this stuff, whether the data really shows you that or not. And there's a good article here from the Financial Times. Let me try to pull it up. Financial Times American Economy Survey. We're just going to do some Googling here. So some interesting things here. And by the way, out of all the publications out there that I would recommend outside of Benzinga, Financial Times is amazing. They're a little bit more like in the weeds and kind of nerdy. So they're not going to be just like the easiest read sometimes, some of their articles, but like if you really want to dig deep into something, and like they do tremendous work over there at the Financial Times. So Americans are adamant that the U.S. Economic circumstances are getting worse. They're wrong. So this is just taking different statements out there, and they basically, the Financial Times asked people, Americans, do you think this statement is true or not? Or they asked them these questions and they answered, and this is if they were right or not. Comparing today to 1 year ago, which has increased faster on average across the U.S., prices or wages? Well, 90% of people said that prices have risen faster than wages. And again, this is the last year. So last November to this November, not the year before that. 90% of people said that prices grew faster. That was wrong. Wages grew faster. Do you think the rate of inflation has gone up, down, or stayed the same since this time last year? Inflation has risen in the past year. 73% of people have said that. That was wrong. In terms of net worth, do you think the median American household is wealthier today than before the pandemic? Wealthier before the pandemic. That was wrong. Wealthier today was correct. Only 13% of people said that. Do you think someone on a medium income could afford a better lifestyle today or a year ago? Could afford a better lifestyle a year ago. 63% of people said that. They were wrong. So bottom line is, for whatever reason, this isn't just like a fringe view that the zero hedge type people on Twitter hold. The average American seemingly has a more negative view of the economy right now than it actually is. And I have some theories on that, and that's really all they are theories. And one that, okay, so let's talk about gas prices for a second. So right now, gas prices, the national average is $3.20. A year ago, it was $3.35. A month ago, it was $3.40. Look at, Missouri. When I was back home in Missouri for Thanksgiving, the average in Missouri right now is $2.70 a gallon. You don't hear about gas prices as much in the news anymore. Now that they've normalized, now that they're down, we gas prices were all that, we're in the headlines every single day when they were $4.50, when they were $5 a gallon. but now it's not going to be in the news as much now that they're normalized. And my point in bringing that up is just that I think with what people see, whether it be on the headlines, whether it be on social media, whether it be what people are posting about, is going to have an impact on your perception. So again, if inflation gets talked about nonstop when it's at 40-year highs and inflation's at 10% and all these things, we talked about it nonstop. And now that it's starting to normalize, and again, I'm not saying I'm happy with some of the prices I'm paying at the grocery store, right? Some of these stuff is still high, but if you look at the year-over-year inflation rate, however you want to gauge it, right? Like not even, and I know people will say, oh, the government, the CPI numbers are fake. There's a lot of people out there that come on the show and try to say that. We can look at it right here. You look at the true inflation rate, which is a private company taking in different data points. Okay, year on year change, updating daily, 3.16%. Again, honestly, not great. That's still above the 2% target that the Fed has set. And you can see here, let's just zoom in on the last 6 months. Oh, it's not even going to let me do that. I don't have to access this, you need a Trueflation account. You don't even need to, you can look right here. It does look like it's been ticking up in the past few months, or at least since, or in the last month, since November inflation. But again, my point is just that when these things are talked about ad nauseum on the media, on social media, it's going to lead to people's perceptions about them being worse than they are. And so again, I'm because this is what I do. I host a show, write articles about the market and all these things. I'm more in tune to this than probably the average American. So I know inflation has normalized and fallen. I know wages have grown in the last year more than the average income is. But that doesn't matter. It matters what the average people feel like. And I think, and so some of it may be political, that people just think like, oh, Biden not good for economy, Trump good for economy. So that must mean the economy is not doing well right now, whether it is or isn't. I throw that out the board. Like in 2019, before the pandemic, the U.S. economy was the best it had been ever in my lifetime. Really, before that, maybe going back to like when I can't remember, besides when like Bill Clinton was, I don't know. But I can also say that the economy is doing pretty damn well right now, and especially when you factor in like people's expectations. Right, there was talking about a recession. If you like 18 months ago. It wasn't even are we going to go to a recession? It was how bad is the recession going to be? How long is it going to last? How many quarters is it going to be? Then the recession never came. The economists thought it'd be impossible to bring inflation down without seeing an uptick in unemployment. Jerome Powell said that himself. He said that there's going to be pain in the labor markets to bring inflation down. He was wrong. There really hasn't been. Unemployment has continued to move lower, while inflation has moved lower, just absolutely baffling economists. And instead of people being like, wow, this is great, I can't believe how great the American economy has held up, a lot of the perception on Twitter and from other people instead has been, oh, well, just wait, it's coming. The reckoning is coming. Just wait. I know I've been saying that for the last 18 months, and it hasn't happened. That recession I've been talking about hasn't happened, but just wait, it's coming. Like, I don't know. I just don't get why we have to be so bearish all the time. Jay Rice, food prices are up 20% in the last 3 years just because inflation is coming. Jay, I know, but like the inflation rate is measured by year over year change. So the prices don't even need to come down for inflation to reach 0%. They just need to stagnate. And that's why I said I'm not still thrilled by some of the prices I've been paying at the grocery store. To be honest, I shopped at I'll be honest with you guys. I shopped at Walmart the other night for groceries, and like everything was on sale. There was a great deal. I got so much groceries for $45. My dozen eggs there was $1.20. And again, that's the same thing with eggs. You're not going to hear about it now that I'm paying $1.20 for eggs. Now that I'm paying, whatever that is, 10 cents an egg. When it was $5 an egg, that's all we heard about. So it's just going to, I just think the reporting on it, how it's in the media, and of course, whenever it's worse, it's going to get more coverage. That's just the way it is. But again, it's just how people's perceptions, and it's not just economic stuff. It's all of this. I mean, I went to journalism school. I studied this, so like I know I learned about how these effects and impacts of the media and one of the same things was with crime statistics for news companies, cable news. When cable news became a thing, they learned, oh, reporting on crime, it got clicks, essentially. It got views. There's an adage in the news world: if it bleeds, it leads. Like if it's bad news, it leads. And so what happened was, because the numbers were good, these cable news companies started reporting on crime more and more. And if you looked at the surveys of the American people, because of this, they all said, like 95% of Americans said, yeah, crime is on the rise, because they were seeing it more and more on the news, when in reality, crime was dropping. And this is in the 90s and 2000s. So it's the same thing, right? It's just the more you see it, the worse you're going to think it is, than if you're looking at the actual numbers. Again, that's just been my kind of, but they're still up, right? But they're not up from last year, which is how inflation is measured. And again, I think a lot of it's political too, because you look at people that perceive Biden's, oil policies as restrictive, and what he was doing with the SPR and the reserve as terrible. And now oil's at $70, and we hit the highest daily oil production ever in the United States under Biden a few weeks ago, not under Trump. So it's like, all right, how restrictive can Biden's oil policies really be? And again, I'm not even trying to get political with it, just objective. Like, you see all this stuff on Twitter of why people think the economy is so bad. Then I look at the numbers and I'm like, hey, maybe it's not that bad. Okay, I mean, look, Jay, again, I literally just said that the economy in 2019, before the pandemic, under Trump, was the best it had been. It's not about Trump or Biden. It's literally just about looking at economic data, which is why I've been bullish for the past 6 months, and I've made a lot of money on this rally. It had nothing to do with me being like, oh, yeah, I love who's in the White House right now, because I don't personally. But again, I don't want to get into that stuff. That's not what we're. Um, okay. Hey, AT. Our next guest has said they can barely hear me. Can you check my audio levels to see if it's on my end? Or audience, if am I quiet for y'all? It's Jay. I mean, I think it just comes down to, again, like, where you're getting in your information, because I think a lot of people, where they're getting their information, would assume, right, that the economic state right now is a lot worse than it is. Um, and again, I just like here, let me pull up this. Yo. All right, we're going to might just be user error with my mic, and hopefully I'm coming through a little bit clearer now. I'm good. Well, I'll leave that up there too. It's not good for my ego, ADW Texas. But that's just basically, again, I think that was my point in bringing up that survey from the Financial Times. Wait, oh my God. I literally just had this pulled up, and now they're locking me out of it. That shouldn't be legal. Look at this, guys. I just had this pulled up, and now I'm locked out. I'll pull up the tweet from Michael Antonelli then. But yeah, I mean, that's just, I don't like when people try to sell people on the whole, like, doom and gloom thing, like things are a lot worse than they are, when the numbers really indicate otherwise. So again, this is from Michael Antonelli, good account on Twitter, Bull and Bear. Let me get this straight. Oil is under $70. Rates are plummeting. 12-month forward earnings are rising. Inflation is falling, which, okay, this one I don't know how true this is, at least in terms of like month over month. Because again, I just looked at that Trueflation rate, which I think that is pretty damn good. The Trueflation, basically, it's this private company that uses alternative data. How the Bureau of Labor and Statistics calculates CPI uses a lot of lagging indicators, uses a lot of things that take months to really update. What Trueflation tries to do, because they're not constrained to using the same type of formula that the CPI that the government uses, they try to calculate inflation more in real time. And they have a whole, prospectus essentially on how they get to this number, what their methodology is, and why it's essentially better than the CPI. So I do like to check that. I'm not saying, oh, the Truflation is always going to be 100% right, because the problem is it doesn't really end up predicting the CPI. So Truflation could show that inflation is falling, and then CPI still comes in higher than expected for like 3 more months before it catches up to what the Truflation is seeing. So it could almost actually like hurt you trading wise, but Truflation does look like it's showing, at least in the last month or so, inflation almost picking back up a little bit, which kind of makes sense. I mean, this time of the year, people are spending money. We saw that Black Friday sales and all these people, all the numbers were really, really good. So it wouldn't surprise me to see if spending and wage growth was really strong the past couple months, thus bringing inflation back up just a hair. Stocks near all-time high. That's great. I'd say my only qualm or, quarrel with, stocks near all-time highs, I think that it is a fair, I guess, like, red flag to point out that it has kind of been this magnificent 7, your NVIDIAs, your Microsofts, your Apples, your Teslas, really taking up a real lion's share of the gains this year, at least in the S&P 500. So a lot of people are like, well, yeah, the market looks great, but look at the small caps, look at, the breadth isn't that great. And it's like, okay, sure. But at the end of the day, right, if you would have told anyone, literally anyone, that, economist Jerome Powell, whoever it was 18 months ago, that, hey, the S&P 500 would be near all-time highs, unemployment would be near, 20-year lows, inflation would be falling, they'd say, done. I'd take it. I don't care how we got there. Don't care what happened. And that's exactly what we've seen. And yet, you still got people out there that are like, no, the economy's not good. The American economy is not good. We're gonna see that recession. It's like, okay, then bet against it. Put your money where your mouth is. Go buy some puts on the S&P 500. Ask people the last, few months how that's been working out for them. And again, I'm not trying to say everything's dandy and perfect. I think it's just been better than expected, and people and the Fed isn't getting credit for it. No one's getting credit for it. Credit card debt is rising, stuff like that. One thing about this 60% living paycheck to paycheck, Jay, I know at least in one specific article study I read on this, they were talking about people that make decent money, like 100K a year. Oh, even people living 100K a year, living paycheck to paycheck. And you go into the numbers and like all of them were maxing out their like 401ks, their monthly 401ks and stuff. So like, honestly, like me personally, I live paycheck to paycheck, but I am making those retirement contributions. So if I stop making those, I would have a little bit more spending money and maybe have a little bit more, but I'm doing that to, so I think like some of that data may not be, I don't know. All right. Well, it is about noon. Our guest has been patiently waiting in the background. My man, Kirk Huntsman. We've had him on the show before. The CEO of Vivos Therapeutics, ticker VVOS. Let me go ahead and pull that chart back up on my Benzinga Pro because it's a pretty damn good looking chart right now. So without further ado, let's go ahead and give Kirk our very special Zinger Nation welcome. And when we get back, we'll be talking some biotech, some high fun. All right, Kirk, can you hear me okay? I know you said I was coming in a little quiet.
No, I can hear you just fine now. Thanks.
All right, well, I can hear you loud and clear. You look great. Your setup's always awesome. That's what I love having you on the show for. You always, your camera looks great. You always sound great. So you guys do it well over there.
All right, thank you.
Appreciate it. All right, I'm gonna go ahead and pull up my Benzinga Pro. Go ahead and type in VVOS, again, the ticker for Vivos Therapeutics. Let's go ahead and zoom in on this chart. In the last month, the stock is up now still more than 300%, even after coming down a little bit. Kirk, what was the news? What caused this spike here?
Well, on November 28th, the FDA granted for the first time ever a clearance to our Care oral devices, oral appliances. a clearance to treat severe obstructive sleep apnea. It was unprecedented. The FDA has never granted any oral appliance that type of clearance, and I think that it kind of rocked the sleep medicine world.
So let's back up a little bit and talk about this product that got approved. I mean, what is it, and how does it differ from your run of the mill CPAP machine?
Yeah. So our line of oral appliances, we call them our care devices, and that's an acronym that stands for complete airway repositioning and expansion. But that our care devices use a very proprietary mechanism of action. Patients wear these oral appliances at night, in the evenings, and overnight. And over the course of about a year, we remodel their airway, and they get a bigger, more patent, more functional airway that's less prone to collapse. And so patients who use our technology, some of them get significant remediation of their symptoms, their obstructive sleep apnea symptoms. Some of them get in some patients, they go away completely. So it's really a breakthrough. And for patients that have, worn the CPAP mask, sort of the Darth Vader thing, that they just don't want to look like that in the bedroom, this represents a brand new option. And for the first time ever, the FDA has recognized an alternative for the portion of the population that has severe sleep apnea, which is tens of millions of people.
Yeah, and I mean, from what I've read, and correct me if I'm wrong, Kirk, but it seems like more and more people are running into these breathing issues while sleeping, and could continue to become a bigger problem for. I don't know if it's specific to Americans. It kind of seems like it is, at least. So a lot of the problems that lead people to have sleep apnea. I mean, what can you speak on just, I guess, the market opportunity? Is it growing, or are people, figuring out how to manage their sleep apnea a little bit better?
Well, I think it's a little bit of both, but it's definitely growing. And I think what's really growing is our ability to diagnose and understand the severity of this, and understand the extent to which this plagues all of mankind. It's now estimated that over 1 billion people on this planet are walking around with a breathing and sleep disorder like obstructive sleep apnea. And so it afflicts, 1 out of 7, 1 out of 8 people on planet Earth. And it's not getting any better. It's getting worse with our Western culture and, a soft food diet, and not developing our jaws the way our ancestors did. The size and position of our jaws has everything to do with the size and function of our airway. And so when we fail to develop the way our ancestors did, we just don't have an airway the way that we used to. And so what Vivos's appliances do, our oral medical devices, they actually work to remodel or redevelop the tissues that define the airway, and help them withstand some of the nighttime pressures to collapse, which is what an apnea really is.
Yeah, and I know I've brought it up to you before, but that I read that book by James Nestor called Breath, and he talks a lot about that, the jaw position, and kind of just what for people at home, it's like if you picture kind of like I don't want to say like, I don't know, just the old like a more pronounced, strong jawline where almost
Right.
like the chin is going out, whereas now people are more developing like flatter faces, and like you said, the diet, all the stuff he talks about. So I would recommend that book to anyone interested. And to be honest, like everyone probably should read it because we all breathe, Kirk. So it's like, why not learn more about how to breathe?
That book is called Breath, and James Nestor has rapidly become an international phenomenon. I mean, we booked him for our breathing wellness conference. We have an annual conference every year, and he gave one of the most amazing talks I've ever heard. But it's definitely something that afflicts a greater portion of mankind. And that book, he chronicles his journey to get to a point where he can breathe again. And some of the technology that was used to treat him is something that Vivos owns. So we're very excited about about the relationship we have with him. We're very excited about this new FDA announcement. This is a game changer. We've had, since that announcement, we have been overwhelmed with inquiries from physicians. It's really interesting, the uptake in the medical community, who recognizes that the CPAP route for 95% of their patients just isn't getting it done. Patients don't like it. They don't want it. And now to be able to have an alternative that actually has been shown to be effective and safe, it's a huge breakthrough. And the response from the medical community and patients has been just overwhelming. So we're very excited about this latest development.
Yeah. What about, so I know that, there's a lot of different things that can cause or lead someone to having sleep apnea. One of them is, if someone's obese or overweight. Has there been any concerns that, like, with the rise of Ozempic and some of these other drugs, that sleep apnea is actually going to become less of a problem that people have?
Well, I get that question a lot here. I've gotten it a lot lately, and I think that distills down to a real misunderstanding about all the contributing factors that go into to sleep apnea.
Right.
Surprisingly enough, sleep apnea begins at the earliest stages of life. It can actually begin neonatally. I mean, we're talking about the earliest formations of the human body, where there's a failure to develop the jaws and everything locally. This is not just about someone's weight. It's not just about, this is not a disease of people who have high BMIs. That is obviously a contributing factor, but the truth is that that's far from being the only factor. So no, I don't think we're going to see any let up in this. And when we do tests, we do probably 80 to 90,000 sleep tests a year through our network across the country. 47% of the patients that we test have obstructive sleep apnea. So it's way beyond the scope of what most people think it is. And there's just such a crying need, both for diagnosis and for treatment. And now Vivos comes to the market with a real breakthrough, the first time in 43 years since CPAP came along that there's really been a significant advance in the state of the art. So we're very, very excited about this. This is an inflection point for Vivos. I think it's a real new day around here. We're very excited as we go into 2024. We see this as a real inflection point, both for the company and for the patients who are going to start to see another option on the table that's much more desirable than what they have today.
100%. And to your point, I mean, I know I've read some articles and stuff about, people in the military talking about a certain percentage of their soldiers having sleep apnea and stuff. So it's not just for overweight, young, healthy people can also be dealing with sleep apnea. What are some of the biggest, potential issues that can arise from sleep apnea? Because like you said, it's such a common thing that people might be dealing with. But then when you read about it and learn, it's like people stop breathing in their sleep for 10 or more seconds until the CO2 builds up and they start breathing. And it's like that doesn't seem that healthy. Like, what can happen from sleep apnea?
Well, the number one killer of mankind is cardiovascular disease. So when you think about sleep apnea, I think the first thing that you have to think about is cardiovascular disease and the entire spectrum from hypertension to stroke to outright heart attack, atrial fibrillation. We have all kinds of issues that are being associated and have been associated with obstructive sleep apnea. And in some respects, sleep apnea just makes cardiovascular disease worse. And in other respects, there are those who feel like it actually causes cardiovascular disease. So when we can affect the rate or the severity of obstructive sleep apnea, we can help lower the incidence of some of these, really things that kill people. So we got diabetes, cancer, early onset Alzheimer's, dementia, as I mentioned, stroke, hypertension, The list goes on and on. There's probably, the last time I counted, I got close to 50 really major, important medical conditions that have been associated with higher levels of sleep apnea. And it's in the severe category where most of the damage occurs. And it can actually cut up to 10 years off of our lives. And so when we're able to address now with this latest endorsement this latest clearance by the FDA, when we're able to address severe sleep apnea, I mean, it's such a game changer for people who feel like they have no real good options as to what to do. And so, and it is affecting their lives, and it is affecting their quality of life. It's affecting their families. They're snoring. The spouses are not sleeping together because they can't sleep because of the snoring that's going on. I mean, it goes up and down the board here of how these conditions with our breathing affect our lives, even to the point where they endanger our lives. So we feel like this is just such an important aspect, not only for Vivos, but for all the patients out there that are suffering from this.
100%. Well, Kirk, thanks again for hopping on Benzinga Live with us, discussing some of this exciting news. Again, I'll pull that stock chart up again. Ticker is VVOS, trading on the NASDAQ, up again on this news. What are you looking forward to? And also, I see a good question in the chat. Is will the devices be eligible for insurance?
They are, actually, and we get reimbursements today. Now, it's not covered entirely the way we would like it to. So treatment is covered. The average is about 50% of the treatment gets paid by insurance, but that's changing. Just last week, we saw some reimbursements come across from some of the payers where they paid for the treatment in full. And so I think it's just a matter of what policy, what carrier, and what region of the country you live in. But more and more, the payers are realizing that when they help a patient get well, that they solve a myriad of things that are downstream. And so we're very very excited about the way that the medical insurance payers are responding to what we're doing.
Beautiful. Well, Kirk, thanks again for hopping on Benzinga Live. I look forward to having you on next time. You guys got some exciting news, and we got to catch up, but enjoy the rest of your Thursday. I know you guys are very busy right now, so congrats on that news again. We'll talk soon.
Thank you. It's a great time. Thank you for having me.
All right, guys, that was Kirk Huntsman, the CEO of Vivos Therapeutics. Again, ticker VVOS if you want to go check that out. And again, last time, free plug on the show. The breath book that we talked about, Kirk and I, if you guys want to go check it out, I would recommend it, because I think I literally think about it every single day, because I obviously breathe every single day. So it's one of those books that I read it once, and now I think it truly impacts my everyday life. Like, one of the biggest things Nestor talks about is the importance of breathing through your nose instead of your mouth. But he, like Kirk said, he walks through his personal journey. So he writes this whole book about breathing, but it's not really boring at all. It's a great, easy read, but he talks about breathing through your nose instead of your mouth and how important it is. So anytime I ever catch myself now breathing through my mouth, even for a second, I'm like, oh wait, no, remember what Mr. Nestor says, got to breathe through your nose. And then so I consciously fix it. And so I think it's had to have, in that sense, been one of the most impactful books that I've ever read, just in the sense that I think about it probably every day and again, that's just a free plug. We have no sponsorship or no anything based on that. But just catching up, I did have some other top stories I wanted to talk about today. Ones that I mostly wrote about. So let's go to my Benzinga Pro, or my Benzinga author profile, pull them up. Oh yeah. So the first one, I'm actually kind of pissed about this, because I pointed this out to some of my friends that are in the industry and investing a few weeks ago. Where on TikTok and Twitter, there were all these calls to boycott Starbucks. But because I think they were coming from such young people and from a young crowd on TikTok and stuff, teenagers posting about, we're going to boycott Starbucks, that a lot of people on CNBC, Bloomberg, etc., weren't even picking up on it, weren't even reporting on it. And I texted, I was talking to my buddies about it being basically I don't think this is going to be any reason to like short Starbucks to the ground, but this could have an impact on sales. And now Starbucks stock has been getting crushed by this. Let's go ahead and pull up the stock chart on Benzinga Pro, and we'll talk about it a little bit because I have some thoughts on it. So basically, background, this whole thing, the Starbucks union, which has these ongoing battles with the corporation still, put out a statement in solidarity with Palestine after the Israeli-Palestine conflict started escalating. Starbucks, the corporation, came out and said, no, you can't use our logo and whatever to make a statement like that, sued the union, and then put out their own statement kind of supporting the other side or whatever. So basically, people on TikTok or whatever looked at these actions by the Starbucks corporation as saying, hey, they're showing their support for Israel, not Palestine. Let's boycott them. That's what these people on TikTok are saying, not me. And as a result, I mean, these videos now on TikTok have been viewed tens of millions of times. Again, did not get any mainstream media coverage over the last month or so. People just were not talking about it. But now you're starting to see it reflected in the stock price. Because this boycott hit Starbucks Red Cup Day, which was on November 17th. Starbucks' biggest annual promotion, Starbucks gives out a reusable red holiday cup if you order one of its seasonal holiday drinks. And people were boycotting during that day. So you can see here in the stock price, I mean, just getting absolutely hammered. And again, it's not, I'm not going to say all from this specific boycott. I'm not saying that, but it's happening at the same time. And you're also getting these, you're getting third-party sales data. So not coming from Starbucks itself, but from these companies that track alternative sales data saying, hey, Starbucks numbers look like shit in November. They do not look good at all. And again, while you're having all these boycotts going on, it's hard not to see some sort of correlation there. And again, this is one of those things that, like, if you aren't tuned in to what's going on social media, and if you're not tuned into what's going on TikTok and Twitter, you're gonna miss some of these investing opportunities. You would have no clue. Again, I still don't think, like, CNBC has written about this or anything. Like, and again, now Starbucks stock went down like 12 days in a row. It doesn't. Yeah, look, I'm looking up here on CNBC right now. CNBC Starbucks. Why Cramer is in wake-up call mode. Here's why Jim Cramer, Starbucks unveils plans. China's floor to stop. Literally nothing about this ongoing boycott calls from kids on TikTok that, again, have tens of millions of views. If you just look at the hashtag boycott Starbucks, it has tens of millions of views. I just don't understand, again, how this isn't even covered by any of the mainstream media outlets. Again, you'd be missing out on this. You'd have no clue that this was even going on. JP Morgan analyst put out a note on Monday that outlined some of this going on. But again, it's like just crazy to me that you have one of the biggest not biggest, in terms of market cap, but one of the most recognizable brands getting boycotted by, and the only reason that I actually like took notice of this and was like, okay, I would actually consider selling calls or something like this on Starbucks. Yeah, fully. Yeah, 100%. I mean, that's what I want to, well, okay. And I mean, it's, so my whole investment thesis on this that I sold to my friends on was, I was saying, I don't think, kids on TikTok calling for a Starbucks boycott is going to be enough to like short the stock to the ground, or that Starbucks is going to be in long-term trouble. Of course not. The brand's going to be fine. They're still going to be selling coffee. But my point was that if you look at the young demographic, say 20 and under, and look at how much money those people spend at Starbucks, and then say, okay, 5% of those people are going to see these messages about a boycott and abide by it and stop buying Starbucks. Even that slight percentage of drop off in sales from that certain demographic, like if you look at all the different umbrellas of customers at Starbucks, and then you take even just like a 2% drop off in one of those, that's going to be enough to see a material change in sales on the quarter. So my point was saying, I don't think necessarily Starbucks, and I was wrong about this because I was saying, I don't think maybe the stock's going to come crashing down. I was going to say, maybe I'd consider selling calls into earnings saying, I don't think the stock's going to go up a bunch just because they're going to have this kind of overhead. So even if the numbers look okay, they're not going to be able to blow it out of the water with all these boycotts going on. So I was looking at doing something like selling calls or something like this. I mean, clearly the market's catching on to whatever's going on because, again, the stock's been getting absolutely hammered while the S&P 500, while other stocks are going up, making, to new all-time highs. I actually, MD, agree. The other day we were out of coffee at the office, and I walked to 7-Eleven and like got coffee there, and I was like, "Damn, this is actually really good coffee." Or I'm not saying it's really good coffee for like a coffee snob, but I really liked it. And then I was thinking about it, and I was like, if you get me like coffee at IHOP, like in one of those like tiny little white diner mugs, that might be part of it. It's like all the little diner mugs, they're like tiny and they're like thick too. So you end up only fitting like 8 ounces of coffee in there. But like that's my favorite type of coffee. Like just that like coffee shop, or sorry, donut shop, or like diner coffee. Like I'm not like a huge coffee snob. So to me, like whatever. And then probably honestly, you'll probably have a lot of people that used to get Starbucks every day, younger people that are like, hey, now I'm not gonna get Starbucks if they feel that way with the boycott going on. And then they might be like, hey, I'm getting it from 7-Eleven instead. Now it's a lot cheaper and it's not as bad. So maybe those customers don't go back whenever the boycott ends. Who knows? But I will say, just, and this is completely anecdotally, there is data out there you can go see. You can, again, search these hashtags on TikTok, see how many people are posting about them, see the views, and maybe the move is to watch those trends and start seeing when they subside. Right? If 1,000 videos got posted today with the hashtag boycott Starbucks and only 900 do tomorrow and then 800 do the next day, maybe you're like, hey, this is a buying opportunity. These boycott calls are ending. These kids are getting bored. Now I'm going to buy it. But either way, you have to be watching those trends in real time. Otherwise, you're going to miss them. I really got tuned into it on this point because one of my friends, she said, like, someone brought me in Starbucks today. I've been purposefully not buying Starbucks. Like, is it bad if I still drink it? And I'm like, no, of course not. Like, whatever. Like, whatever. Drink your coffee. Like, who cares? But I was like, if this was a girl that I would have never ever assumed, would be like, it's not like she was like some like radical whatever. Like, she's just like a normal, whatever. And I guess had seen these videos on TikTok by it, and I was like, huh, maybe this is bigger than I realized. We looked at Starbucks. Yeah, I mean, so I would just, again, like that's why I would watch like the trends on TikTok and stuff. So again, they'll start subsiding at some point because that's what kids do. They get bored with whatever the recent trend is. So if the recent trend is to boycott Starbucks, they'll get bored with it. And I think it goes both ways because I think on one end you can say, hey, at the end of the day, you're not going to be able to touch Starbucks. And 30 years from now, Starbucks is still going to be selling coffee. Your boycott didn't really do anything. But the other side of that is, hey, clearly it is doing something. I don't really have any other explanation for why, McDonald's has also been getting calls to boycott in a similar fashion. I don't think they've clearly have not been near as effective, or maybe the market hasn't been picking up on it. But from the data that I was looking into, it looked like the Starbucks boycotts were getting a lot more attention. We're getting a lot more attention on TikTok and whatnot than the McDonald's ones. AMD, geez, let's look into this. Yeah, AMD, there was some big news yesterday that like Microsoft and some other tech companies decided to go with AMD for some chips instead of NVIDIA. I assume NVIDIA is probably getting, NVIDIA's not getting hit, but it's not trading up as much. I mean, to be honest with you guys, like, look, these stocks are probably expensive as shit right now. If you're a value investor, if you're looking for deals, you might look at these share prices and say, no way, never. But if you're like me and you're, in your 20s and you could buy some of these stocks and hold them for 20 years, I think there's almost zero chance. Literally, I think there's quite literally zero chance that NVIDIA and AMD aren't higher in 20 years than they are today, just based on where everything is trending in terms of what needs chips, what needs AI. That's not a financial advice, by the way. Google, yeah. Jay, just to wrap up, because we were talking about this right before Kurt came on. Again, I don't want to come off as super partisan or anything like that. My point, in fact, was the opposite. Was just that I think people are having, have their views, and typically people will see that see it, whether it's economic, whether it's whatever, through that framework or whatever their views already are. I am going to try to be as objective, as common sense possible. So like middle of the ground, not getting swept up in this, on this side on the right or this side on the left. So in that sense, just talking about super objectively, middle of the ground, talk about the Fed. Did the Fed screw up by leaving interest rates so low while we sent out stimulus checks, letting inflation get to 10-year high? 100%. The Fed effed up. And that was under, a lot of that was under Yellen's leadership. I mean, whatever. Part of two different administrations, part of that happened. It doesn't matter. Either way, Fed screwed up. With all that said, where's unemployment at? Where's wage growth at? Where's inflation at? To look at what the Fed's done throughout the last 10 years through a global pandemic that we haven't seen. I mean, I think we're doing pretty good. Like, I think we're okay. Like, I'm okay with, the Fed, having loose fiscal policy late into the because guess what? 2019, before the COVID-19 pandemic, when Trump was still in office, like I said, that had been the best the economy had been. Yeah, we still had very loose fiscal policy, but guess what? Inflation wasn't going up. We didn't see inflation until COVID hit. So you can say I have no idea what I'm talking about, but I'll say that I do, because I know that unlike some people, Jay, that do think that, oh my God, we run a deficit, that means that inflation's going up. That's not true. That's why we were able to run a zero interest rate policy from 2016 to 2019 before the COVID-19 pandemic without seeing inflation. In fact, we're seeing deflation in certain areas. So again, like I think that was good economic policy, and it was under Trump. And I think what the Fed's doing now is good economic policy, and it's under Biden. I'm not saying it's perfect. I'm not saying it's great. But look at how other countries have done. Look at what other countries are dealing with inflation-wise. And then you're going to say the Fed is like the boogeyman? Come on, man. I can't pat the Fed on the back when they were the main reason for inflation. Again, I just said the Fed did screw up when inflation got to 10-year highs. I can say that objectively, but I can also say objectively that since then, navigating what has, for all intents and purposes, looked like a soft landing that most economists, including Jerome Powell, thought would be impossible. Can't give any credit. Again, I'm trying to be objective, middle ground. I think that's common sense. Say, yeah, they screwed up. Oh, yeah, but since then, they've been doing a good job. It's like a quarterback, Jay. Imagine if you had a quarterback who threw 3 interceptions every single game, the first 3 games, and your team started 0-3. And then he started playing lights out ball. Started playing lights out. And now you're 10-3 and you're looking at a first seed in the AFC. You can't say, hey, he's been playing well. Can't say, hey, he's been doing pretty well. You got to say, oh, you can't pat him on the back because he's the guy who made us 0-3 to start with. It makes no sense. Yeah, I think the Fed policy from like 2016 to 2019 was good. I don't think you have, and again, we're going to see this again coming up as inflation falls. I don't think the Fed has any reason to raise interest rates until inflation shows that it's rising. Otherwise, you're just making restrictive economic policy for no reason. I want America to prosper. I want as many Americans to have good jobs as possible. And you do that through encouraging economic activity with low interest rates, by making it easier for businesses to borrow money, by having business-friendly economic policy from the government. If you think that the interest that the Fed future fund rate should have been at 2.5%, higher than inflation in 2019, then I will argue against that all day long, Jay. And I have data to back it up, and you're more than welcome to come on the show and talk about it with me. Because I promise you there are a lot of economists on my side, including the people running the Federal Reserve at the time and Donald Trump. That could happen if wages stay high and prices come down. I mean, what could happen? I mean, typically prices go with wages. So that's why when the Fed watches wage data, they don't like to see too much wage growth because that has I know, and Jay, I guess it just comes down to a matter of opinion. I'd rather see the Fed err on the side of having looser fiscal policy, closer to zero, and have more people employed, more people have jobs. And then when things start to look like, okay, inflation is picking up, now we need to raise a little bit, rather than saying, hey, let's keep inflation, or let's keep the Fed fund rates at 2%, 2.5%, even though inflation's not really going up, which is going to keep unemployment, say, at around 4% instead of 3.5%. Why not get, again, been a ton of writing about this. You look at Japan's inflation rate. Japan hasn't had any interest rates in like 30 years, and their inflation rate hasn't gone up. Please replace Bill Maher. I mean, I'd love to, because that dude is washed. That dude is trash now. Absolute trash. Bill Maher is now, and so same with the. How's Howard Stern doing? Is Howard Stern? I mean, I know he's still like hosting shows and stuff, but I feel like people don't like him. Yes, exactly. Now you're starting to get it, Jay. Transitory. It always meant 2 years. It meant just wait. No, I'm kidding. No, I think Bill's like, I don't know. I think Bill Maher used to be great, and I think he's just kind of lost it. I think he's just kind of become like more and more boomer takes, instead of he used to be like the cool night show host that had like, interesting, I think like other takes than mainstream media. And over time he's become this is actually one of the last times I tuned into Bill Maher. I might be able to still find it real quick because I wrote about it. Aaron Bree, Benzinga, Bill Maher. Oh yeah, here we go. Oh man, Unkel's making me sign up. Why doesn't the Benzinga thing pop up? But anyway, what happened was, this was like, I gotta find it now. I'm sorry, guys. It's gonna bug me if I don't. All right, you guys keep talking in the chat while I'm doing this. Benzinga, Aaron Marie. Okay, here we go. So this was from June 21, 2022. So this was like right in the heart when everyone was freaking out about the economy, saying there was like a huge recession. Basically saying so Crystal Ball, who hosts a show called Real Time or Breaking Points with Cigar and Jetty, pretty good show. During Crystal Ball's appearance on Bill Maher's show, the topic of inflation came up. Another guest, conservative commentator James Kirchert, commented on how much the U.S. government sent out in the firms, insinuating that stimulus checks are why we were seeing high inflation. Ball rebutted, saying people don't talk about the stimulus checks that went out to everyday Americans, but don't care about the trillions of dollars that the Federal Reserve deployed in attempts to stabilize the stock market. And that's where things got interesting. Bill Maher pushed back on Ball. So again, this is in June 2022, more than 2 years after the COVID-19 pandemic hit in like March 2020, crashed the market. And this is where things got interesting. Maher pushed back on Ball, asking when the Federal Reserve pumped money into Wall Street. She correctly explained that while the market was collapsing in March 2020, the Fed began buying trillions of dollars of assets. Bill Maher seemed to not know that the market crashed at the beginning of COVID pandemic, asking the stock market crashed and we never heard of it.
The economy. There's way too much government spending, and that's why we have inflation. So that's a large part of that.
If this loads, hold on, let it buffer for a sec.
that is a bit of money in their bank account. It's just not honest.
And a little bit of money, they got more than we spent in World War II. So don't act like
hold on.
Whoa. Had to react to the pandemic exactly the way we did. We had to spend $6 trillion.
Okay, but how about the trillions that the Federal Reserve shot at Wall Street? For some reason, people don't get upset about that.
How much?
And that
what'd you say?
fueled the trillions of dollars the Federal Reserve shot at Wall Street to backstop the stock market and the bond market. No one gets upset about that, even though that was a massive
I don't know what
factor in
you're talking
inflation.
about. What do you mean shot at Wall Street?
Well,
when are we talking about?
We're talking about buying assets, buying stocks, buying bonds, buying treasury bills so that they expand the balance sheet. This is during the crisis, the coronavirus crisis. When the stock market crashed, that is what the Fed did. They went into action. They shot trillions of dollars.
But the stock market didn't crash during COVID.
Now it's crashing. It's crashing now.
It crashed, and the Fed came in and backstopped it. That's what happened.
What, it crashed, and we never heard about it?
No, it crashed. Go back and look at it.
I think
it fell off.
So that was for me when I was like, all right, Bill Maher's kind of lost it, because he's like, if you're gonna say you didn't know that the stock market crashed when COVID happened, that was like the biggest, like the market literally crashed like 30%. The S&P 500, people are freaking out about their retirement accounts, and he just seems so out of touch as like an elite multimillionaire out in California that he didn't even know that the stock market crashed. So how am I going to listen to this guy about anything if he didn't even know that one of like the biggest news stories of 2020 happened? And Jay, again, like that is to me, like I would just say that has literally nothing to do with inflation. Because McDonald's itself as a company has come out and said, hey, we're testing a new thing where we're charging more in certain areas where people spend more money, like Southern California, New York City, wherever. McDonald's themselves, you go to McDonald's in Iowa and it's a lot cheaper than if you go than in California. So because McDonald's as a corporation is essentially price gouging in certain areas, that doesn't tell us anything about inflation. That tells us about, how corporations make money. I'm not saying it's a dumb move by McDonald's, by the way. In fact, it's smart because someone in LA probably has a little bit more spending money to buy a $15 combo meal at McDonald's than someone in the middle of Iowa. But that's why you have, people saying that these companies shouldn't be allowed to do that because, again, you're going to look at it and say, wow, inflation's bad. But those are what the corporations are doing. That was a panic, not a crash. I mean, either whatever you want to call it, MD. The market crashed. The S&P 5. I mean, do we need to do this? Do I need to like just pull up the S&P price and look? I mean, it came back pretty quickly, but again, and Crystal Ball was right in the sense in that the Fed did pump trillions of dollars into assets. And it was funny because you could literally see it in real time. The market was crashing. I remember watching CNBC while this was going on, and they announced the Fed just announced $500 million more money going into the market. And you'd see like a little green candle for a second, and then it would just start going down again. Like they were trying to stabilize it and didn't. And then eventually, obviously their stimulus package did help, but they backstop treasuries. Yeah, I mean, so either way, I've done enough ranting for today. Smack dab in SoCal. Yeah, I mean, again, and that's why people are gonna have different perceptions on things as they see. So if you're dealing with the Southern California, LA type prices, it's not pretty. But I don't think that's indicative of the overall economy. But yeah, I don't know. My point was, I guess, just as like a middle of ground observer, as objective as possible. I don't think that things are bad that some people would like you to believe. I think the Fed screwed up when inflation got to 10%. I think they've done a pretty damn good job since then. So yeah, hey, we'll see. I mean, I don't think, again, and if inflation continues to fall, or if inflation does fall closer to the target rate, then I think the Fed should cut rates. Why not? Why not spur more economic activity? Why not encourage businesses to spend more? Why not encourage businesses to hire more people? There's a multiplier effect. When people start earning money, then they start spending money into the economy, and it's good for the overall economy. And then again, it becomes bad if it becomes too much and it's too hot, and then you have to take the gas off a little bit. All right, y'all. That'll be a wrap for us today. I think we'll start doing some different things on the show moving forward. So I've got some ideas. I kind of like what Bill Maher does. He brings on. I'm gonna start trying to do that. He brings on, different guests at the same time that have differing viewpoints. I'm gonna start doing that. Other idea too, I might toggle with. Yeah, I mean, hey, here's the thing. I'll give you my takes. You'll probably disagree with me on a lot of shit, but I'll give you my takes and I'll be honest with you. And I'll tell you when I'm saying something that's my opinion versus when I'm saying something that's just objective. But even I guess it's like hard now because I can say something that's objective and it's still people will still take it as I can say like, hey, we're in a better economic position than we were a year ago, and people are like, no, we're not. And it's like, okay, well, you can look at literally any measure. The PCE, which is the Fed's favorite measure of inflation, is now lower than it was in 2021. So I don't know. You're saying Bill Maher's views shifted? Yeah, Jay. Jay, if you make that happen, I'll sign you over 50% of the rest of my career earnings for the rest of my life. Yeah, I think Bill Maher's views I don't know. I think that's just what happens when people get older. I don't really know. We'll see. All right, guys. Peace and love, y'all. Smash the like. Smash the like for Kirk Huntsman from Vivos and Tony Unkel from Entrust Group. Yeah, I think Bill Maher's views have been shifting in the same ways that a lot of people have. And again, it's fine. I mean, that's just like the public thing, but I just don't see eye to eye with Bill on a lot of things. Which is fine. Again, would love to go on a show sometime. Maybe that'll make that one of my career goals. Maybe I'll try to get big enough to where Bill Maher invites me on a show sometimes. I do like Crystal Ball is good. Still love you too, MD. Still love all y'all. And I like having, I mean, it's good that, this was good. We should be able to have, and Jay, I'm serious. If you want to come on the show and we'll talk, I'm happy. Let's do it. I don't think it's bad to have differing viewpoints and discuss these things. And I think, Jay, if we do come on the show and we talk about things, I think we'll probably end up finding out that we agree on a lot of things too. And a lot of things we disagree on. But I think that's one of the things that's probably a bigger problem with, in general, America, politics, all these things is like people should be able to have civilized conversations with people they disagree on and not have it be some like personal thing. Get tickets to his show, Bill Maher. I assume he's in LA, Burbank or something. I'll tune in. Hey, I will say, like, one thing as someone who hosts a show myself, one thing I'll appreciate is even someone like Joe Rogan or Bill Maher who might have their own political whatever. If they bring on people that have differing viewpoints and have those discussions, I'm all about it, right? Like I'm all about it. So I'll check it out. Yeah, to me, I wouldn't even say, like, it doesn't even seem like Mars that much on the ledge. It seems like he's kinda like Howard Stern in the sense that I think he just really doesn't like Trump, and outside of that, is probably more in line with a lot of people in the Republican Party right now too. But Bill Maher is funny. I mean, I don't know. Like, yeah. Alright, guys. That'll be it. Long show today. Peace and love, y'all. Till next time.